So this month, I've got some good news and I've got some bad news. And like much news, whether something's good or bad depends on your perspective. It depends on where you're standing when you're looking at the information. And I'm going to explain that as we go through the material today. So I am Justin Miller with the Chong Miller Group. And this video looks at the residential resale market for Las Vegas single-family homes. So let's go ahead and look at the numbers. The first number that we want to look at is the sales price. What did things actually sell at in the Las Vegas Valley? Now, not listing price, but actual sales that actually concluded. Median sales price for single-family resale residential, $460,000. That's up. It's up $10,000. It's up from $450,000 at the end of January. That's up 2.2%. Third record of the year, right? We're looking at data for the third month of the year, so third record of the year. Like last year, prices just keep going higher. In fact, year over year, prices are up $100,000. So March of 2021, $360,000 median sale price for single-family residential resale in the Las Vegas Valley. We're up $100,000 or 27.8%. Now, that's a lot, right? I mean, that's great news if you're a homeowner. Maybe it's challenging news if you don't own any real property yet. But if you're a homeowner, wow, $100,000. Let me put that into a little bit of perspective. Median income in the Las Vegas Valley, according to the current population survey, median wage income in the Las Vegas Valley, so for an individual, $46,000, and you own the median housing unit in Las Vegas, in addition to your $46,000 in salary you made last year, you made $100,000 in gain in net worth through your house. Houses are investments. They are productive assets. Yes, once in a while housing prices can go down, like other investment can go down in value. But actually, housing prices have significant resistance to downtrends. And so housing prices tend to stay stable and they tend to escalate. And at different times, they may escalate slowly or they may escalate quickly. But they tend not to go down for a variety of reasons, which we can cover in another video. And if you don't believe that, then you should go watch the other videos that I do, especially the Ask the Professor series, where I get into some of the reasons why housing prices tend not to go down, especially in high growth environments like Las Vegas. So housing prices are on a tear, up $100,000 year over year, up 27.8%. Now, for those of you who frequently watch my videos, you know that I also provide information on price per foot because it can be illuminating of certain internals in the marketplace. So price per foot at the end of March of 2022 was $250. That's $250 per foot. So if you're looking at a 1,000 square foot home at the median, that would be $250,000. Right? You just simply multiply the number of square feet and the price per foot. At the end of February, so 1 month prior, 2022, that number was $244 per foot. So we're up 2.5% month over month. And if we were to look back 1 year to the end of March of 2021, that number was $195. So we're up 28.2%. Year over year on price per foot. Now that 28.2% is not appreciably different than the 27.8% median sales price. So the the internals of the market dynamics show that there was not really a skew toward higher or lower end properties. in March in the Las Vegas Valley. So that suggests actually the market's functioning in some manner pretty normally across the entire range or distribution of housing sales. All right, but how many houses sold? The number of houses that sold in March of 2022, and this is where the statistics start to look maybe a little bit interesting because you can tell different stories here. 3,137 single-family resale houses sold in the Las Vegas Valley in March of 2022. Now, that's up. That's up a lot from a number that was a little bit lower in February. It's up 30.7% from the 2,401 that sold in February of 2022. But it's down. It's actually down pretty considerably. It's down 12.4% from the 3,582 that sold in March of 2021. So what gives? All right. So this is where statistics can start to mislead. And when people cherry pick the statistics that they present to you, as opposed to presenting to you the full picture or trying to present the picture that's most accurately reflecting what's going on in the environment, they can start to tell you oddly divergent stories. And this is where you get good news and bad news around the same thing. I'm Justin Miller with the Chong Miller Group. I produce these videos to put valuable real estate information into the public domain. If you find these videos to be interesting, helpful, or have usable content, please subscribe to our YouTube channel. And as they say in the YouTube universe, please smash the like button. That way I'll know to continue to produce videos like this. Thank you. And now back to our show. So sales are down, have been down every month so far this year from where they were last year. Well, that doesn't sound very good. It sounds like the market was weakening. Well, yes, but last year's sales numbers were the highest in history. So when we say we're down 12.4% in March 2022 from March 2021, note this. The number in March of 2021 was the single highest number for any month, not just a March, any month in the entire history of the Las Vegas Valley for single-family home sales. So we're not running at the record volume that we ran at last year, but we're really strong. In fact, March of 2021 is the 11th highest month for sales volume since 2011. So in the past 10 years. In the past 10 years, there were 120 months, and this is the 11th highest. It's a really strong number. And this is closed sales. And this really strong number is occurring at a median price of $460,000, a record high median sales price. And the price per foot is showing that it's actually, we're seeing this happen across the entire range of the market. Those properties that are below median price, those properties that are above median price, the entire market is being pulled up approximately evenly. So really strong. People who wish to preach doom and gloom are out there, and they're telling you how volume is collapsing, that sales are way down. Yeah, they're down 12.4% from last year, from an absolute record. But it's still the 11th highest monthly total of single-family home sales in the history of the Las Vegas Valley. This is not a weak number. This is a really strong number. March 2022, a very strong month in the real estate market in Las Vegas. All right, what about pending home sales, right? Because people don't buy homes instantaneously. They write contracts to buy a home. And the contract goes through an escrow process. And that escrow process takes some period of time. During that time, a house is considered to be in contract. Some people say under contract, same thing, or in escrow. How many houses were in that pending category, in contract or in escrow? 3,332 pending contracts at the end of March of 2022. Now, that's up. It's up 24.0%. And it's the second highest number since 2012. Wow. Second highest number in a decade. It's down, though. It's down from 3,356, or down 0.7%, from where we were last year at the end of March of 2021. It's down by 24 units from what was a record, right? Actually, the highest number since 2012 was last March for pending home sales. We're down by only 24 houses. We've got lots of contracts being written. We've got lots of sales being concluded. And we've got record prices. Very strong single-family housing market. All right, so how many units are for sale? Well, this is where things start to get more challenging and we start to pick up some bad news. Objectively, bad news. 2,477 single-family homes for sale at the end of March of 2022 in the Las Vegas Valley. That's down 10.9% from the 2,781 that were for sale at the end of February. And it's down 28.8% from the 3,477 that were available for sale, sitting in inventory ready to be sold at the end of March of 2021. These are the lowest numbers in the digital MLS. As I've said repeatedly over the past several months, we are just simply plumbing the depths of the inventory in this market. And I'll point out to you, 2,477 for sale, 3,137 sold, 2,477 for sale, 3,332 pending, right? For sale is below what's sold and what's pending. Now, of course, there are new to market, newly listed houses that come up into the market that people want to sell. Fortunately, because otherwise, in 3 weeks, there wouldn't be anything for sale, because that's about what the inventory is we have right now. New listings in March of 2022, 3,572. Now that's up. It's up 20.1% from the new listings in February of 2021. Now remember, we always get this seasonal pattern. It's a general pattern that becomes more or less pronounced during any particular year. But seasonally, as we get towards spring, more houses come into the market. Also, more houses sell. As we go into winter, fewer properties come into the market and fewer properties sell. So we would expect to see increased for sale, increased new listings in the market in March than we would have in February. So we generally look at this more year over year to understand better. By the way, the 3,572, that's actually the lowest March since 2013, and it's the second lowest March new into market since 2008. So while we expect to see this increased number in March, and we're up 20.1% from the month prior, we're actually not hitting very high numbers for March, and we're down 3.0% from the 3,684 that were newly listed in March of 2021. So we're weaker than last year in terms of new into market. We're weaker than last year in terms of inventory sitting in the market for sale. And inventory sitting in the market for sale is below new homes sold, meaning closed, and new homes gone into contract, meaning pending. So the bad news is there's not a lot out there for sale right now. And that will drive prices higher. Now, a couple interesting things, right? People get scared. Wait, what's going on in Las Vegas? It's a very volatile market. Prices go up, they go down, sales go up, they go down, and it can be really dangerous. Well, as I've said in some of my previous videos, actually, if we exclude the financial crisis, housing prices generally go up or stay stable. They don't generally go down, and that's true here in Las Vegas as well. But we do have a volume of sales transactions which is a bit more dynamic than other markets, and so we may get significant volatility in sales month to month. Having said that, it means sometimes we want to take a step back and we want to understand how Las Vegas is comparing to the rest of the country in terms of the housing market, because the rest of the country may be somewhat more stable than is Las Vegas with regard to volume shifts. So an interesting statistic that the National Association of Realtors put out earlier this past month, across the country, there were an average of 5 offers, written offers, being made per listing. So let's think about that for a minute. When we look at NAR statistics, they're national. And so they include places like Detroit and Baton Rouge and Tulsa, Oklahoma, and other places that are maybe less dynamic, maybe less desirable to some people, certainly smaller, and actually have lesser activity in the marketplace. Obviously, the national statistics also include places like New York City. They include places like Silicon Valley. They include Las Vegas. Equaling all of that out across the entire country, for every listing, there were 5 offers that were made. This data is actually for January. NAR statistics are a little bit later. But in quarter 1 of 2022, what does that mean? That means there's high demand and low inventory all across the country. That should provide some level of insight and certainty as related to what's going on in this market. And what's going on in this market is, for various reasons, some of which we've talked about in other videos, and some of which we'll talk about in future videos, for various reasons, demand is astoundingly strong right now. And inventory is really low right now. And those are 2 separate things, but they are both pushing prices in the same direction, and that is higher. So, but Justin, some of you say, how do we know this is a supply issue or a demand issue? Well, we know it's a demand-driven issue because sales are not going down. They're strong in the face of increasing prices. And if you look at a microeconomic supply and demand curve, if prices are going up and volume is going up, that means you have demand being very strong. If it's a supply problem, prices will go up while number of units transacted go down. Where are we right now? Number of units did go down. Number of units sold did go down year over year, but we're the 11th highest month in the history of the Las Vegas Valley. So overall, sales are not going down. Sales are staying incredibly strong, and they're up 30.7% from where they were the prior month. So we know it's demand driven. But what about lots of supply coming into the market? The president of the Home Builders Council suggested there's no possibility of that happening. A lot of the work I do, probably about a third of it, is actually new home construction. And we're seeing delays in new home construction and delivery. One of the people I'm working with, he's buying a townhome, and it was supposed to be delivered in mid-March. It's been delayed until June, is the current estimate. One of my clients put a contract on a house, a new construction home, in August of last year. The foundation was laid in mid-December of last year. There's no lumber that's going to be delivered, according to the developer now, latest estimate, until June of this year. So it'll be almost a whole year before any framing takes place for that particular client. For reasons of labor scarcity, for reasons of raw material unavailability and supply chain problems, for reasons of finished product unavailability and more supply chain issues, new housing construction cannot keep up with the demand, right? So yes, we do have supply issues, but these are demand problems. And by the way, nationally, over the past month, mortgage loan applications for new mortgages up, mortgage loan application for refinances down. Of course, as interest rates go up, we see refinances go down. But there have been people out there who've been saying, well, as interest rates go up, we're going to see all this demand evaporate because it was only low interest rates, so-called super cheap money, that was causing people to want to buy houses. Interest rates have been going up for 6 months or so now. Interest rates have gone from approximately 2.75% on a 30-year fixed mortgage at the bottom to now about 4.5, 4.75. So we're up 200 basis points. What's happened with the number of closings and the number of pending contracts? Have they been collapsing? No, they've been really strong. 11th highest number of sales in the history this past month in the history of Las Vegas Valley, and the second highest number of pendings since 2012 in the history of Las Vegas. So we're not seeing high interest rates kill off demand, and we're not seeing high prices kill off demand. Very, very strong market. Now, one other statistic I've been talking about for the past 6 or 9 months, and this is an interesting one, and this one's also bad news. And I don't mean bad news in the sense of the market's collapsing. I mean bad news in the sense of there's some significant dislocation that shows in the statistic, and the statistic is elevated. We don't want it to be elevated. The number of back on market, right? So remember, somebody sees a house, they really like it, they write an offer on that house, it goes into contract. It becomes a pending home sale. It's a pending home sale until it closes or until it falls out of contract. And then it can either go back on market or the house can be removed from the market with a withdrawal from the market. Most houses that go back on market, most houses that fall out of contract end up going back on market. And so we'll ignore that small number that may just simply withdraw from the market. So back on market represents a failure of a contract. Failures of contract can happen for multiple reasons. There could be a bad inspection, and the buyer says to the seller, hey, per the inspection, we would like to have these things repaired. And the seller may say, not happening. It's a strong market, and if you don't like our house, drop out of contract and we'll sell it to someone else. Contract fails, house goes back on market. It may be about appraisal. Buyer says the appraisal came in low. Seller says, I don't care, I'm not going to negotiate with you. House falls out of contract. Now, obviously, in both those instances, buyer and seller can negotiate and they can agree and keep the contract alive and move to conclude the sale. But both of those places are times where contracts fail. Seller intransigence in the face of bad inspections, definitely that's elevated. Appraisals, very problematic. And while I sometimes beat up on appraisers because they're not doing good jobs, in this market, legitimately, appraisals are becoming challenging in the sense that an appraiser looks at the comparable sales and they're looking at sales that closed last month, which means contracts that were written the month before for your house that's going to close, if you're in contract, in another month. So appraisers are looking at data that's 2 or 3 months out of date, and we're up 2.2% month over month this past month, third record high price. So appraisers are looking at data which may be 4, 5, 6, even 7% out of alignment with the current market because they're looking at comps of things that happened months ago. Appraisers should be able to handle this, but it's actually a hard thing to do. How much did the market escalate? The appraiser's got to figure it out. It means that a lot of appraisals are coming in low, a lot, and it's a problem. Well, how big a problem is this? In March of 2022, 1,408 contracts, houses, came back on market. 1,408 contracts failed. In a market that actually closed 3,137 single-family homes. That implies a 45% failure rate on contracts. People, you may think in this kind of market, anybody could sell a house. It's easy. You just tell somebody, yeah, I'm thinking about selling my house, and suddenly you've got multiple offers. It's not working that way. 45% of contracts, not offers, contracts are falling out, and houses are going back on the market. If you own a home and you're thinking about selling, know this, that statistic, more than anything else, should give you pause and cause you to realize it's very important who you trust to list your house. Because almost half of contracts are failing. And if you have an agent who gets you into a contract that then collapses, that's far less good than an agent who gets you into contract and has done everything possible to make sure that contract is going to actually close. Now, there are times where something happens that you cannot control for prospectively, right? If a buyer dies, they can't buy the house. The contract falls out, the house goes back on market. There are other things that can happen, but those are relatively small numbers within that 1,408 that went back on market in March. This back on market number has been elevated for the entire time I've been talking about it, which is almost a year now. But this is the most elevated it's been. It's a problem that's increasing in magnitude. You list your house, you're super happy, you've got 5 offers because it's like the middle of the market and it's just like the average house across the whole US, and you took 5 offers and you went into contract and it fails. And now what do? You've got a big problem because you may need to get your house sold to buy the next one, or to retire, or to move closer to work or closer to school, or whatever it is that you want to sell your house for. Make sure you're talking to agents, a couple of them, who really understand what this market is, how this market is working, and how to protect you from the failed contract. If you're a buyer, across the whole country, you're in competition with so many people that across the whole country, there's 4 others competing on that same property you put an offer on average. And in Las Vegas, it's actually tighter inventory than nationally, and greater demand than nationally because of features of the Las Vegas market. We're a growing economy, unlike some others. We are a dynamic economy, unlike some others. You're competing with a lot of people at all price points. At that $260,000 amazing deal that you can get on a particular small house, to that multi-million dollar property, you're in competition with a lot of other potential buyers, and they're making offers just like you are. You need to have an agent who really understands this market and understands how to position you to get you into contract, and then how to make sure you can get through contract to close with all of the potential, not just speed bumps, but pitfalls that you can fall into in the current environment. Your choice of agent, buy side and sell side, really, really important for you right now. You want somebody who knows this market, who's actively participating in this market, who has experience, who has a really deep understanding of actually all of the fundamental problems that are taking place in contracts right now. At the Chong Miller Group, we help buyers and we help sellers. We help our clients succeed in the housing market and position themselves to benefit from the trends that actually exist in real time, not to benefit from the fake news. And by the way, if you're out there listening to the doom and gloom people saying, wait, hold off, the market's going down, over the past 12 months, if you were a buyer, you've lost out on $100,000 at the median, literally $100,000. If you're a seller and you're listening about how the market's collapsing, get out now, well, that's not helpful to you. You want to position yourself in the market with the most knowledge possible, with the person who's most capable of helping you. Please reach out to us. We'd love to talk to you about it. We can help you. We really can. I'm Justin Miller with the Chong Miller Group. Look forward to hearing from you. Thank you.